Hello everyone, this is Giulia from Sustainit, and first of all I'd like to thank you all for joining our webinar on Framework Mapping the Future of Consolidated Sustainability Reporting today. Before getting started, I'd like to make some housekeeping. The webinar will be 30 minutes long with time for questions at the end. To ask questions, you can use the question box, part of the GoToWebinar control panel that got launched when you joined. If we won't have time to answer all your questions, we will get in touch afterwards to help you clear up all your doubts. We will record the session, and an email with the link to the recording will be sent to you after the webinar, together with our contact details, should you need further help and support. And now, on to the webinar. I'm really pleased to introduce our panelists, Kathy Sage from Sustainit and David Quinn from Greenstone. Hello both, and over to you, Kathy.
Thank you, Julia. So I'm going to give a quick introduction to Sustainit. So Sustainit are a key player in the global corporate social responsibility data. We were established in 2005, and we have over 40 years combined experience providing managed and professional services to FTSE 100 and Fortune 500 companies. Our services include software support, data analysis and verification, project planning and management, software selection and implementation, sustainability strategy and target setting, and sustainability consulting. Whilst we do work with multiple software solutions and partners globally, we remain independent. This way, we're able to offer our clients unbiased advice across many software providers. So the aim of this webinar is to help break down different sustainability reporting frameworks and to provide guidance on the process of reporting to multiple frameworks. So I'm Kathy, and I'm going to be giving the first half of the webinar on the overview of key frameworks. And I will then hand over to David from Greenstone Plus, who will talk about the alignment of these frameworks and give tips on how to benefit from these linkages. And after this, we'll have time for some of your questions. So sustainability reporting is a relatively new industry, only really starting around 20 years ago. The main aim of reporting was to create a measure of sustainability. This could be within governments, companies, cities, or on any level. A framework should help you establish what you are reporting, with a clear set of top-level reporting indicators or information to disclose. By having frameworks in the sustainability reporting world, it creates compatibility. This can be in reporting similar indicators or in setting benchmarks. So essentially, the frameworks can create a compatibility to allow speaking within the same language. For this reason, different frameworks will also often overlap. Organizations can exploit this overlap and map to many frameworks. However, if these frameworks are not well aligned, this can become a burden, and when similar but slightly different data is being requested from different frameworks. The importance of sustainability in business is increasing, and by mapping to a framework, it makes it comparable for an investor who may be looking at a portfolio of different companies over many industries. This could also inform investment decisions where the investor is a large corporate with their own sustainability investments. It is likely that also mandatory reporting on social and environmental issues will increase in the near future. So the Sustainable Development Goals are represented by 17 goals and 169 targets. It has an achievement date of 2030, and it's also known as the 2030 Agenda. They're the replacement of the Millennium Development Goals and include a wider remit, including environmental protection. In 2015, all 193 members of the UN agreed on these goals, and it's generally seen as a very broad framework that can and has been adapted to various businesses across all industries in the world, allowing for a global consensus. This covers across governments, large multinational companies, and down to small businesses like us at Sustainit. Like many international measures, they are based around social, environmental, and economic indicators. Therefore, these can easily be incorporated into business strategy and reporting. The website supportthegoals.com outlines positive and inspiring stories of ways that businesses are supporting the Sustainable Development Goals. For example, if we look at Goal 12, responsible consumption and production, or more specifically, Target 12.5, which is by 2030, substantially reduce waste generation through prevention, reduction, recycling, and reuse. The website gives examples of businesses that are ensuring sustainable consumption and production patterns within their operations. This can be used to inspire other companies to follow in the same direction. If you're interested into reading further into why the Sustainable Development Goals are important for businesses, there is a blog on the Sustainit website. Many other frameworks will draw upon the broad SDGs and narrow down to the scope to make it much more specific in exactly what needs to be disclosed. An example of this is GRI. The Global Reporting Initiative was the first international sustainability reporting standard. It was founded in 1997 and is a collaborating organisation with the United Nations Environment Programme. The main focus is on providing sustainability frameworks for businesses. It can be seen as the most widely recognised standard in the world. Again, like the SDGs, it's all-encompassing. However, it also offers much more depth into individual indicators and disclosures. It is now set up in a modular process, allowing for easy update of specific modules. There's a focus on materiality assessment to identify relevant and important areas or modules in an individual business that they should be reporting on. By following guidelines, it allows easy compliance to various standards and regulations. There is no scoring process on performance. The focus is more on being transparent about the company's impact and engagement with GRI. GRI also has a gold community, which are the core supporting companies and organisations working towards the 2030 agenda. The gold community members are open to networks and opportunities to collaborate, as well as dedicated support and knowledge sharing. The Carbon Disclosure Project is a not-for-profit organisation with headquarters based in London. Unlike many other reporting frameworks, CDP has maintained a focus on only environmental indicators. This is also split into 3 areas: climate, water, and forests. The main audience is individual cities and companies that can disclose their data under impact in these 3 areas. There are over 200 cities currently showing their action against climate change through CDP. Recently, they have made a move to sector-based reporting, allowing for better comparison between similar companies. This also allows more informed decision-making for investors, and it can focus on the most relevant data within each sector. CDP provides data analysis on key areas of risks, opportunities to improve, and general impacts. They believe that better disclosure leads to greater action, and it's important that the report helps the understanding of the impacts. GRI and CDP signed a Memorandum of Understanding to improve consistency of environmental guidelines in both frameworks. This will allow standardization of data, both natural and capital. The United Nations Global Compact was set up in 1999, with initially 9 guiding principles and a 10th added in 2004. It is seen as the largest corporate sustainability initiative operating in over 161 countries. This framework is directly targeted at businesses and applying the Sustainable Development Goals to them. The guiding principles can act as a framework through which businesses can conform. It's expected that these principles are included in fundamental business strategy and decision-making. When it comes to alignment, GRI's reporting guidelines use the UNGC's 10 principles, and the UNGC have adopted GRI sustainability guidelines as the recommended reporting framework across the world. The Sustainability Accounting Standards Board was established in 2011 and provides standards for over 79 industries. It is organised under the 5 main areas shown on the slide. It concentrates on the management of corporate environmental and social impacts. SASB has its own standard board that oversees all processes, outcomes, and ratifications. There's a 6-step process conforming to the standards that is split into 2 clear areas. The assessment of the materiality. This is the process of deciding which information is important to report, such as what information reflects the sustainability strategy or operations of the company. The second step is testing the application of this materiality assessment. This ends in the validation of the accounts with a quantitative analysis. SASB references other metrics throughout the framework from over 200 entities, including CDP and GRI. The Dow Jones Sustainability Index was launched in 1999 as an independent index managed both by Dow Jones and the private asset management firm RobecoSAM. It is now widely used sustainability standard used by investors and companies alike. It is centered around three main areas: economic, social, and environmental, with a weighting of a third each. There is a defined set of criteria by which companies are assessed. After the assessment phase, the top-ranked companies within the selected industries are then classified within the index. The process of joining DJSI requires strict guidelines and conforming to corporate sustainability assessment set by RobecoSAM in the form of questionnaires. After these questionnaires are complete, companies can then be given a status depending on their scores. These include sector leader, sector mover, which is the biggest proportional improvement, and lastly, gold, silver, and bronze, depending on their index score. The DJSI has aligned the climate change questions with CDP and with some modules in GRI. The Task Force on Climate-Related Financial Disclosures was created at the COP21 in Paris in 2015. It was created by the Governor of the Bank of England, Mark Carney, and the former Mayor of New York, Michael Bloomberg, as a result of the Paris climate change talks. The main aim of the task force is to develop recommendations to the financial industry on how to effectively disclose any risks related to climate change to stakeholders such as investors. The TCFD is supposedly filling the gap in sustainability reporting landscape for rigorous reporting of long-term climate change risks. The first full report was published in June 2017 to outline various recommendations and key issues that financial markets need to consider in the future in relation to climate change. These recommendations are structured around four thematic areas: governance, strategy, risk management, and metrics and targets. The Task Force on Climate-Related Financial Disclosures recognises the complicated landscape of reporting in their June 2017 report. It has tried to align its recommendations, including frameworks such as GRI, CDP, and SASB. So to reduce the complication and overlapping frameworks, there has been several attempts to align standards. At this point, I'm going to hand over to David to talk through his alignment process and to give a few tips on streamlining your reporting.
Great, thank you, Kathy. So thanks to Sustainit for inviting us to be on today's webinar. As Kathy says, I'm David Quinn. I'm the head of client services at Greenstone. So Greenstone, we're a software company, and we provide software and support to companies to help them manage their non-financial reporting. So that covers environment, health and safety, frameworks, and then supply chain. And a lot of the work that we do with organizations is particularly around helping to report to different frameworks. So using the CSR frameworks module within our software to help clients create sets of questions and then map those to different frameworks for data collection within the software. So today, what I'm going to go through is a little bit around the landscape in terms of the framework mapping, and then go through 5 practical tips and recommendations around looking at how frameworks are mapping to each other currently, and how you can leverage those for your own reporting and data collection. So the first thing, as Kathy says, is that the framework landscape is getting more crowded in terms of more organizations being asked to respond to different requests, new investor requests coming up, and what we hear from organizations again and again is that they're being asked to provide more data to more different places. And one of the sort of key frustrations or difficulties with that is that often it's very similar information that's being asked from different organizations. So from a process perspective, it's really important to look at how you are collecting data and can streamline it to then report to these different places. So in terms of those different frameworks, there's lots of acronyms here. So some of the ones we've already covered, looking at GRI, the Sustainable Development Goals, some of the UN principles, so the Global Compact, but also the principles of responsible investment and the women's empowerment principles. There's also then a whole host of other ones, frameworks, which are investor focused. So looking at CDP, but also the likes of MSCI, SASB, Sustainalytics, etc. And then many, many other frameworks. So, you know, could have done 10 slides just on frameworks and acronyms. But just an example here, looking at real estate sector specific ones, science-based targets, RE100. So all of these different frameworks that are out there. And so companies are increasingly under pressure from a data perspective to organize that data to be able to report it to all these different places. So we're focusing today very much on external frameworks, but another thing to sort of also mention is the internal frameworks as well. So as well as organizing that data for external reporting, there's also increasingly the need for different internal frameworks for reporting information. And again, framework mapping is something that can help to facilitate that in terms of the data collection process. So before we dive into the 5 key areas, I just wanted to sort of reflect a little bit about how that process has changed and how we've seen companies really look to streamline their data collection for this type of information through mapping. So historically, organizations have tended to take quite a siloed approach to reporting and data collection. So they would collect data for reporting according to GRI, say for their annual report. They would then also collect data for CDP, also collect data then for some SDG disclosure information, maybe tying it into UN Global Compact. So it's very much a sort of viewing these frameworks independently. And for smaller organizations or organizations that are early in their journey, that's a relatively manageable process. You may have a couple of frameworks that you're reporting to on an annual basis. But very quickly, that will, as the company matures, what we often see is that companies then get more and more of these frameworks, which can then become burdensome in terms of, you know, how do we actually manage that information. So what we're seeing much more now is organizations recognizing the difference between the different frameworks within that. So some of them, the more investor-focused ones, are more prescriptive because those types of frameworks require comparability and giving investor audiences a specific set of data, versus ones that are more flexible frameworks. So looking at things like GRI and UN Global Compact, which provide more flexibility for organizations to select things that are material to their organization to disclose. And so what, through their mapping process, what organizations are doing much more now is looking at these different metrics that are included across the frameworks, and then creating a centralized data hub for where that information is stored. So that is used for data collection and approval of that data, so it's been signed off, and then it can be tagged to these different framework requirements where it needs to be pulled and disclosed from. So it's very much about pulling that into a data management process for collection, and then of course, as the frameworks evolve over time, new mapping is then maintained within there so that the data can be exported for these different reporting needs. So that's just a sort of bit of background on what we're seeing companies doing more now in terms of how they're looking to manage their processes going forward. I wanted to just pull out then some specific examples of where you can leverage linkages in your reporting based on some of the frameworks that you might be grappling with. So firstly, the SDGs. So the Sustainable Development Goals, a lot of organizations are looking at how they can align their reporting or talk about how they are contributing or linked into the Sustainable Development Goals. For those that aren't aware, the SDG Compass is a great resource in terms of being able to look at linkages. And what that allows you to do is through the SDG Compass, you can look at business tools that you may already be using and how they link to specific SDGs. So for example, a lot of organizations will be calculating their carbon emissions data using the GHG protocol, which quite obviously links into the climate action SDG. However, there are other business tools included within the SDG Compass around specific internal analysis functions and metrics that are tied into the other goals within there as well. So that's a great resource to look at and to see how you can get some practical ideas of tools that you may already be using or you could look to use, and how they would link into the SDGs. The second area I just wanted to highlight was around GRI. So GRI, as Kathy says, it's very well established. It's 20 years of reporting, no, just over now 20 years reporting with GRI, and it's widely used global framework. And its strength is in its breadth in terms of being able to provide companies with a broad set of aspects and indicators that they can then pull from. The GRI do a lot of work globally in terms of linking with other frameworks. So Greenstone, we're a software partner of GRI, and GRI do a lot of work linking with these other reporting frameworks. There are publications on the GRI Resource Center around linkages. So the GRI G4 was the previous version, and there were a number of linkage documents to stock exchange requirements and other areas. There's also linkages between G4 and the new GRI standards. So with GRI standards, the various synergies have been set up in terms of linking. So what we see a lot more of now is through software is people distributing questions across the organization related to GRI standards to gather that information, but then within the system, those questions are tagged to other frameworks. So for example, you're asking a question related to GRI, but you can see how it's then mapped to SDGs through mapping. The next area that I wanted to just touch on was the TCFD. So in sustainability, professionals love acronyms and new reporting frameworks every year. TCFD is the flavor of the moment. And the task force on climate related financial disclosures, as Kathy's outlined already, that does. But CDP have aligned this year's reporting with the TCFD recommendations. So by responding to CDP, you have those linkages already built into the response. So we work with clients in terms of looking at those linkages within there. I also just wanted to highlight that actually there was a new resource that was launched today, which was the TCFD Knowledge Hub. So that was launched this morning, and this has been put together by CDSB, Climate Disclosure Standards Board, as a resource for organizations to be able to look at how TCFD is being implemented, find examples and tools. So if that's something that you have been looking at, I would definitely encourage you to have a look at that. It's live as of today, and has got some really useful resources on there for organizations. The fourth area that I wanted to pick up on was around sector-specific requirements. So a lot of the frameworks that companies are grappling with, in addition to those global frameworks, are sector-specific requirements and sector-specific reporting. And so it's important to look at how your sector-specific reporting requirements are linked into other frameworks as well. So for example, through the SDGs, there are sector disclosures under GRI that are linked into those within there. There's also a lot of work being done at a sector level with the SDGs. So the SDGs, I've just taken some examples here from the SDG website around partnerships. So this is just looking at the number of partnerships within the different goals, and then the increase over the recent years in the number of partnerships that have been happening. And a lot of those partnerships are at sector level. So the SDGs, more than any other framework, really are an opportunity for organizations within a sector to come together and be able to look as a sector and as a whole how they feed into and link into the SDGs. We've seen that in various sectors. A good example would be the mobile phone, so the mobile operators sector. It's about 800 mobile operators across 300 companies have all come together and are reporting as a sector on the SDGs. And there's also a guidance around this. So a great resource is the World Business Council for Sustainable Development, the WBCSD. They have a guide. So if you search for SDG sector roadmaps, then that's a guide which is a step-by-step process for advising sectors on how they can explore a common vision for the Sustainable Development Goals. So we're seeing a lot more of that work done. That report is the SDG sector roadmaps that was published about 2 weeks ago. And again, really within the sector, there's a lot of work being done there. So for companies that are exploring those linkages, it's a good way to look at how you can come together as a sector to explore those. So finally, in terms of software, just to elaborate slightly on this, I just wanted to give an example of a case study in terms of an organization that's sort of done this exercise and is now sort of at the next step in terms of managing this process on an ongoing basis. So as an example here, this is where, using technology and through software, you're able to distribute questionnaires, but then across questionnaires, create framework tags within there, so both internal and external frameworks. So you're getting that back-end tagging of questions so that you can then export data for different frameworks from the system. So it's a good way of creating your own questions. Often people will simplify the GRI questions, maybe to distribute questionnaires, and then see those tags within the system. So just as an example of a company, this is an organization we've been working with. They have 8 external and 4 internal frameworks. And some of the key benefits of taking all of those metrics, putting them together, and then looking at where the same questions can be sourced with the same response. The obvious one is minimizing duplication of the same data requests from different stakeholders. So if you're asking a person in the organization for a policy, and that policy is then approved and it's then tagged to 3 different investor requests, you've got that in one place and you're not asking them for the same information again. You've also got targeted approvals. So within this type of data collection, something to be really mindful of is when you're collecting data, whether that's public or private, and therefore whether it needs approval before it's disclosed. So that data attributes is a really important part of it. Centralized document management, as I say, kind of sits alongside how you're collecting a single set of documents within there. And then being able to visualize the metrics and information you're collecting for different frameworks in a single place within there. So for this organization, that's really given global oversight of data sign-off, and fundamentally the ability to then export those questionnaires according to different framework tags using technology. So I'm going to pass back to Julia now. I think we've got time for a few questions just before we finish.
Thank you, David, and thank you, Kathy, as well. That was really, really interesting. And yes, we have a few minutes for questions. So I have a question from Kathy here. What are the benefits of reporting against a framework? Over to you, Kathy.
Okay, so for a company, I think that they'd benefit from mapping to a framework just by getting a clear methodology for reporting. So it will set the indicators that you need to disclose your information on, and it will give a structure to your reporting. It could also be the thing that starts up a company's sustainability momentum, and at an ending point, it might even set a goal to work towards. Frameworks are also likely to be recognized by stakeholders, so it will show your commitment to sustainability. So reporting to a framework will positively impact the way your company is viewed, so by their customers. And investors may request for certain sustainability information, which would affect their investment decisions. If companies are transparent about their impacts, it can benefit them financially as well as through their image. And framework organizations can also provide support to companies as well as knowledge sharing.
Thank you very much, Kathy. And one question for you, David. How can companies manage changes to frameworks that might have been mapped at the start of the year?
Yeah, sure. So often with frameworks, so there's an upfront exercise in terms of mapping. A lot of those framework mappings are already well established. So we hold a central database of those in terms of those framework mappings. But obviously, companies will also have company-specific ones as well in terms of specific investor requests or internal frameworks within there. So it is important to maintain that, and in terms of making sure that the mappings are up to date or they're reviewed on an ongoing basis. So that's something you can get support on from consultants or managing internally within the organisation on an ongoing basis. And particularly for key frameworks, like I say, a lot of them are very good at producing those linkage documents. And keeping those up to date in terms of how they change over time.
Okay, thank you very much. Well, we are now running out of time, actually. So once again, thank you very much, you all, for joining us today. And you will receive an email with the link to the recording after the webinar and our contact details. And so if you need any further support or help, please do not hesitate to get in touch with us. Thank you very much.